Airbnb's IPO has finally hit, and soon after opening, the stock price basically tripled after settling down to about 144 bucks. Is Airbnb really worth 144 bucks? Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. I used to be an Airbnb host here. I was one of the first Airbnb hosts in our entire city. I think I was the third one or so. We did it for about a year, did pretty good, enjoyed the experience, and we've also used Airbnb in different places around the world too. I quite like Airbnb, I'm a fan of it, but I need to put that all aside while we're evaluating it as a stock, as an investment, if I'm going to be a potential owner of this company. Today we're going to take a quick look at Airbnb, kind of how this evaluation is going, some of the things we should look out for, whether or not I think it's worth it, whether or not I got some of the stocks, and also, wanted to know if you're interested in doing a little bit more of a deep dive. Let me know down in the comment section below. Check it out. Here's our stock price chart. I can't zoom in any more than this, but you see a huge spike of volume right at opening, right below that 13 down there on the bottom left. Stock price flies up to nearly triple its price. Airbnb was originally going to IPO for like 40, 50 bucks, but they ended up bumping the price up a little bit more to, I think it was 68 bucks. And yeah, it flew right up after that. The way this works basically is Airbnb has a bunch of people in the company who get stocks as payment. And they also offered stocks to hosts in the US too. So they said you can buy up to 200 stocks for that 68 buck offering price. And then, you know, Wall Street people and stuff like that. So once it opens, it's technically at 68, but a bunch of people buy it at 68, throwing that price up. And then more and more people are like, it's rising, it's 70 bucks, it's going up so quickly, 80 bucks, 90 bucks, oh, this is so quickly, I should get some more, 90, 100, 120 kind of thing. And so it just flies up and up and up. Eventually it settled down at 144. I was talking with some of you guys earlier and people were saying, what do you think is gonna happen? I was saying I really wouldn't be surprised if it settles down at like 150-ish, because things are just really bonkers and silly right now, especially with tech, especially with IPOs. So this year, we have all of these really tricky dynamics kind of interweaving into making analyzing any stocks, especially tech, especially IPOs, like virtually impossible. We have the pandemic that's thrashing a lot of tourism and travel related businesses. We have these kind of seasonal bounce backs like we saw kind of in the second, third quarter with a lot of brick and mortar stores. After the lockdowns were let go, we saw this huge spike in a bunch of different industries. We did see that in the results for Airbnb in the third quarter. We saw revenues kind of trailing, melting down, and then third quarter, whoop, way back up, including their profit margin. And we'll get into those numbers specifically here in a minute. But one of the really tricky things is that we don't know how it's going to go in the fourth quarter. And at the same time, in the market, we have all of this exuberance from a lot of young, new investors who aren't afraid to use leverage and options plays and stuff like that, that really make the prices go out of whack. And so a lot of people are getting into stocks as like, dude, I can double or triple my money in a week, rather than like, I am an investor, I'm an owner of this company, and I'm thinking about this over the long term. So we're seeing a lot of volatility. And interestingly, Airbnb's volatility, Airbnb has kind of been a really big catalyst for change and growth in the whole kind of hospitality industry, as well as like city planning and development and tax laws all around the world. You've probably heard that big cities like New York have tried to ban it and had laws against it, or a lot of cities basically said like, if you're going to be running an Airbnb, you have to fall under hotel laws. And if you are categorized as a hotel, you must have this many bathrooms and all these different facilities and things like that. And here in Japan, it was similar for a long time. So a lot of people were doing it, but it was kind of gray. And now we're seeing cities more and more being like, oh, actually, if we tax this, it's good for the city. The hotels don't really like it, but that's kind of what we have to do. And we saw in 2019, as tourism was booming in Japan, there just weren't enough hotels. So they're like, we can't really tell people not to let people stay in their houses with Airbnb. So we need to change the laws. And so Airbnb basically single-handedly is causing all of this drama all around the world, making it even harder to evaluate as a stock. Check it out here. This chart done by Medium was kind of surprising to me. It shows the largest lodging companies by listings. Airbnb is number one with 3 million listings around the world, with second Marriott 1.1 million. So Airbnb starting up this new platform, like compared to hotels, they don't have to go out and spend billions of bucks to build a grand, resort with actual buildings and stuff. They don't have any of those expenses associated with it. People go on and volunteer their own properties, and it's like plus one, and it's grown really rapidly in these last few years. But unlike hotels, if those rooms aren't being used, Airbnb isn't losing money. Marriott and Hilton and all the other hotels like in Vegas and stuff like that, they're actually losing a lot of money by having to pay the loans, by having to pay staff, by having to maintain the buildings and stuff like that. So Airbnb has a really big advantage when it comes to hospitality. And this is one of those big companies that really changes the world, really changes the modus operandi of the way companies have been run in entire industries. At the same time, speaking of IPOs and how it's really almost like a foolish pursuit to try and evaluate them properly, DoorDash just IPO'd yesterday. Check it out, here is the one-day chart. We see a lot of volatility, but basically where it ended up settling down was DoorDash is a $60 billion company, and it's not. I think a lot of the exuberance coming into it is like IPO equals a huge amount of gains immediately and easily. I don't actually have to care or know much about the company, so buy. And DoorDash's earnings and DoorDash's growth and the reputation does not merit a $60 billion market cap. And so we're gonna see that settle down over the months. Similarly, earlier this year, we saw Palantir and Snowflake IPO with similar results. A lot of people are just like, oh, it's a new company, I have to get in now because by default it will go up, without even considering the business fundamentals or where things are going. Check it out, here we have the Snowflake IPO. It's like $400 now. I haven't done an analysis on Snowflake, but you can see the price fluctuations going on here. Similarly, Palantir IPO'd for $10 and it's now 30 a few months later. I have done a video on Palantir. If you want to learn what they even do, it seems like nobody even really knows what they do. So I break that down a little bit more and explain who they are, what they're doing, and some of the future prospects they have, as well as my own position on Palantir. Check it out up here. But all that to say, IPOs are really tricky business. And I know a lot of big long-term investors who are just straight up, I literally never touch IPOs. And that's a safe stance to take, I think. If you're a gambler and you want to just be like, oh, I want to ride the hype and double my money in a week, then go for it, I guess. That's not my style and I don't recommend that because things could have as well. So going back into Airbnb, second quarter lockdowns hit, they're struggling big time. They even mentioned in their report, their S1, which they have to file with the government to IPO, they're like, we have insane amounts of debt and this could ruin us, and we'll get more into some of those concerns here in a minute. But Airbnb had to cut 25% of their workforce in the second quarter. And people are like, oh man, it's not looking good for Airbnb. We did see in the third quarter that ended up helping with their profitability in the third quarter. But we also know that the fourth quarter is going to bring many more lockdowns and travel restrictions. And actually in their S1, they've said fourth quarter is going to be garbage. And I think it's pretty smart of them to IPO now in the third quarter, right after good results. I'm pretty sure, once we see fourth quarter results, it's going to be like letting the air out of the balloon, and it's just going to be like, people are going to be like, Airbnb, oh man, that's not worth $150. Pretty sure that's going to happen. Check it out, here we have a HyperChart. If you're interested in HyperCharts, if you find these interesting and helpful, please click the link down below and you can become a member too, and that'll support our channel. Here we have the revenue and operating income chart. So we can see, let's take a look back to last year, third quarter. We see really healthy revenues at 1.6, almost 1.7 billion. And this third quarter, 1.3 billion. So we're almost back to where we were last year as far as revenues. We can just go ahead and ignore the last couple of quarters because they were so garbage. These are things to keep into account, especially this negative 600 million operating income from last quarter, because that contributes to their debt. But going into third quarter that just finished, they did post a 418 million operating income, which we'd like to see. And I think we'll probably continue going into the future, not this coming quarter, but in a year or so. Some of the other risk factors they mentioned in their S1 report include, obviously, the pandemic, laws, government actions, natural disasters, their recent reduction in their workforce. Check this out. We've incurred net losses of 70 million, 16.9 million, and 674 million, and 696.9 million for the years ended December 31st, 2017, 18, and 19, and the 9 months ended September 30th, 2020, respectively. We also had an accumulated deficit of 1.4 billion and 2.1 billion respectively for 2019 and 2020. So they're saying, hey guys, the risks of our company is that we have insane debt and we're also not making any profit and we don't have any cash on hand either. So Airbnb is really upfront about their shortcomings on this, and I think when people are looking at IPOs, they tend to not really look at those numbers. There's a big hole for them to dig themselves out of as far as, being in profitability and then being able to stack up cash. I think they're on the right track, but I think people may not really realize how dire kind of things are for Airbnb at the moment. They also mentioned here, our adjusted EBITDA and free cash flow have been declining and this trend could continue. They go into some of the numbers and details there, but they say also that they're making significant investments in certain markets, especially China, and so one of the things to keep in mind in terms of, growing profits and stuff is that small companies that are growing typically will be plowing their profits back into growth. So we shouldn't necessarily be like, oh, why don't they have $10 billion cash on hand or something like that? But just things to think about when you're evaluating this company. So is the stock worth 144 bucks? Is the company worth $86 billion market cap? I personally don't think so. I'm not in love with the current stock price of 144 bucks, obviously. And with net income figures only hitting about $200 million a quarter right now, it's like a really big stretch. But we live in an era of really conky, really nonsensical evaluations anyways. So if you're thinking I would like to be an owner of Airbnb over the next 5-10 years, if you're just buying little by little, it's not gonna matter if it's 140 bucks right now and 80 bucks next week. If you're just buying a little bit here and there, over the years, you're probably gonna be happy with your decision if they continue to grow and get out of their debt and the world gets through the pandemic. If you're a gambler, I'm not a gambler, so I can't give you any advice on that. As far as an actual price target, I'm really comfortable with 60 or 70 bucks a share. If it goes under 100, I might be grabbing a little bit more. The current price, I think it's kind of wonky, but at the same time, like we saw with Snowflake, it might just keep going up forever. But yeah, if you're in this for the long haul, just dollar cost average in. Don't worry too much about the spikes in this kind of first couple of years while everything is going crazy. And keep in mind that stock prices are very inflated on the whole market at the moment anyways. If you want me to do a more in-depth dive, leave me a note down in the comments section below. Also, if you could hit that like button, that helps us out a lot here on the channel. Additionally, if you want to start up a new brokerage account, we have an agreement with Webull. If you hit the link down below, deposit 100 bucks, you'll get 4 stocks valued up to 3,700 bucks, and that will also help us out here at the channel. Coming up soon in a couple days, we have a more in-depth dive into Shopify and their stock, my thoughts on it as a small business guy who's used Shopify over many years. And we're also probably going to be doing Alibaba coming up in a few days too. If you're interested in checking those out, hit the bell icon down below and hit the subscribe button too if you haven't already. Thank you guys very much for your time. Love you guys. Have a great week and or weekend. Talk to you soon.